Good morning and welcome, Patriot News Hour. Joe and Jason on this Monday. We're back. Yes, had a few days off. 4th of July. I guess the only good news about 4th of July being like on, the middle of the week, Thursday, Wednesdays, things like that. You know what? You can sneak an extra day. So 4th of July was Thursday. We decided, you know what? It's hotter than Hades here. Let's just take it all off. So we haven't been here since last Wednesday, but man, do we have a lot to talk about. I mean, from elections, not just here at home. Joe Biden today, he's not giving up yet. Nope, he sent a letter. Yeah, I don't know who wrote it. It was 2 whole pages, so I'm sure it wasn't him. But it's saying to this Democrats, you got to get behind me or challenge me at the convention, which we're probably going to do. But elections in France where it was a battle of the far right versus the far left. Apparently, it was the far left taking it. I guess that's better or worse. I don't know. They're talking about wealth tax and debt bombs and everything else. Plus, we had jobs that came out. The government jobless report came out on Friday. We have gold threatening record highs again. Silver's over $31. Jason, just everywhere you look, there's something that you're like, okay, how is this going to play out? And we dubbed this the year of chaos. It's lived up to that for sure. But I think we're going to start seeing very soon how a lot of these things are going to play out. And I think a lot of people are going to be caught off guard.
Yeah, things are moving every single day. There's just a little bit more indication of why you should be buying gold and silver. We sell gold and silver because it's like anything in life, the basic essentials, right? You need certain things to make your life in modern day America go a lot more smoothly. And Joe, a lot of people sabotage themselves by not taking care of basic needs. I consider gold and silver an economic basic need. And everything we talk about always just goes right back to why you're supposed to be purchasing gold and silver and holding it for the chaos and the craziness of the things that are going to be happening. And I really believe in the next months and years to come, you're going to be looking at these times as being very significant. Joe, it's happening. It's happening. It's all you have to do is look at it, right? And it's happening. Things are getting really crazy.
I don't like to put too many numbers on it, but doubling of the price here over the next several years, I think is probably going to be viewed as good. Dare I say that because of how big it's going to get. We have a lot of debt issues globally affecting especially, I'll call it, I guess, the friends of the United States. When you look at the G7, right, the vast majority of the G7, they got financial problems. And of course, now they're turning to, like in the UK, right, England. Hey, we got to have a new government. Now, France, we've got to have a new government. And the problem is, between the central banks and the government, that's what got these countries in trouble to begin with. And, of course, we know what's going on with Japan. We know what's going on here. It's an interesting situation as we start watching all of this unfold. 800-951-0592. That is our toll-free number. allamericangold.com. Here's the great thing about allamericangold.com. Not only do we put articles and videos up there to keep you educated, but we also have that shopping cart up there, and people used it all weekend long, right? It doesn't matter whether we're here or not. You can order 24 hours a day, 7 days a week. But, Jason, let's start with the jobs number. 206,000 was the number from the government. So remember the month before was 270. That was too hot. This was much, I guess this was less, but very, very big adjustments from the last 2 jobs numbers. 272 in May, down to 218. Now remember, birth, death created most of those jobs. April, 165 down to 108, which would probably, based on these revisions, you go back to this 206 number, and we're probably going to get a number, below 150. That's probably what we're looking at. Almost all of the jobs only came from two categories: healthcare and government. And we know who's hiring in government. Well, we know the IRS is, right? That's the one place we definitely know where a lot of the jobs are. Jason, the unemployment rate went to 4.1, which is a very big indicator that people are losing jobs and having trouble finding another one, at least finding another one quickly, which tells you this isn't probably the fast food worker, right? This probably isn't the bar restaurant worker. It's probably more of a, middle management or some type of, I'll say a little more full-time type job that they're having a hard time finding another one.
That's right. And then you've got this whole revision. They get to revise the number months later, as if they can't give us up-to-date information. Well, at this point, why is there a weekly number? These numbers come in, and everything is the information flows very fast. But a couple months later, we'll revise the numbers and change it because the number needs to be what they want it to be that day, right, Joe? So those revised numbers I think, are significant. Yeah.
We'll be back. Oh, by the way, another retailer maybe closing its doors. I'll tell you who that is next. 800-951-0592. Joe and Jason here on this Monday. Quick look at the markets. The Dow's up 120. The S&P's up 5. The Nasdaq's up 32. And again, we're watching the bubble here. Right, we're kind of, they love to use the sports analogy, so I guess I'll use one here. We're very late in this game. Matter of fact, we may be in extra innings when it comes to this. The 10-year note right now, 4.29. Crude oil at just below $83 as the first hurricane made landfall in Texas. Now, it was only, by the time it got to Texas, it was down to a Category 1. We'll see. Galveston got hit pretty hard. There's big refineries there. There's 1.5 million without power. We'll see. Hopefully nothing too serious, but it's not a good sign this early, these big storms that are hitting. Gold and silver right now. Gold is down 15. Now, of course, gold's been on a huge rally, so 23.75 down about $14 right now. 23.75 closed at almost $2,400 on Friday. Silver's down just a little bit, down a few cents here, right at $31. But diversifying here is going to be key. This isn't, we always say, the last bubble was worse than the bubble before that, which was worse than the bubble before that, which was worse than the bubble before that. Now, I didn't put us on a boom and bust cycle. That's the Fed does. That's what they've decided to do. They decided, hey, we're going to try to always have economic growth no matter what, right? That's what we're just going to print money. They've been printing money since 1971. I mean, really, when you think about it, it's crazy how much money they printed since then. I mean, 1971, the national debt was $400 billion, of which $250 billion of that was left over from World War II. I know almost every other year from the end of World War II to 1971, the government would run a budget surplus. In other words, really the debt from the end of World War I to World War II to 1971, the debt barely grew. It really didn't. We had just as many surplus years as we had deficit years. Of course, when they broke away from the dollar, Nixon closing the gold window changed everything. But this is why you need to be more diversified than ever, because now what do we have? We finally figured out, well, how much debt is actually going to cause a problem. Some people thought $5 trillion was going to cause the problem. It didn't. There was a blow up, right? There was a blow up, but it was able to reinflate, right? We were able to sell all kinds of treasury bills all over the world. Now that's changed. Now we got a problem, don't we? And we know. Here's the sad part, right? The debt isn't stopping; it's growing every single day. The ability to reinflate after this bubble is going to be extremely difficult. And Jason, we're going to have a stretch. How long is it going to be? Is it going to be 5 years? Is it going to be 10 years? Is it going to be longer than that? We don't know. But do yourself a favor. Get even more diversified. You got to have your gold and silver put away. We keep talking about our friends at Y Refi. It's not for everybody. You got to have at least $50,000. But if you've got $50,000 or more, you can use an existing IRA. Some of you can use a 401k. Maybe you got too much money in your money markets or your bank accounts. You can get up to 10.25% fixed rate of return. Why do we love it? First of all, it's a great program, what they do, and they'll explain it all to you. You actually feel good about doing it. But the big part, Jason, is it's not correlated to Wall Street. It doesn't matter if the bubble bursts. What if the bubble bursts and they can't reinflate? Doesn't matter. What if the bubble doesn't burst for another 6 months? Doesn't matter. What about the Fed? What if they do? Doesn't matter. What about the government? What if they shut down? Doesn't matter. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or just call them. 888-YRefi24. Now, last week we did talk about Walgreens. Remember, their earnings came out. It was horrendous, right? Their stock, I think it lost like 20% in a day. They announced over the weekend they're closing 91 stores, but they weren't done. See, that was kind of the easy part. They're saying over the next 3 years that Walgreens may end up closing thousands of stores that are essentially, well, they're just not making enough money, but they're going to start off with 91 of them immediately, not to be outdone. Big Lots. I don't go to Big Lots, but I mean, they're everywhere. They said that they've got to face possible permanent closures. They're saying that they're going to announce more store cuts. They just announced 40 more stores. They closed 52 stores earlier, but they're saying elevated inflation has sapped the buying power of consumers, and the retailer who has been losing money steadily since 2022 says, Jason, they may not be able to stay afloat. And it's kind of interesting when we're talking about Big Lots. They got 1,400 stores. We're talking about Walgreens. People are saying that Walgreens is going to close 2,000 stores. All of a sudden now, retailers are really starting to show the effects of the inflation because the consumer, right, they don't have the discretionary money they used to have.
And these are stores, I think, that are pretty important to notice more than a lot of the restaurants or other things. I mean, they're all important as far as showing the health of the economy, but retail stores, let's face it, Walmart can swallow up the lion's share of those dollars, but when you need retail establishments all over the country, and there's a lot of buying going on, you just grow. There's more and more and more and more stores. So if retail outfits are shutting down because there's not enough buying that are going on, and it doesn't matter what area of the country it is, that's a huge indication of recession, isn't it, Joe? When you have retailers shutting down, that's less buying all around. I mean, retail. I mean, you talk Big Lots. Big Lots they do quite a bit. They're like a small Walmart. And when they're shutting their doors, and Walgreens, same thing, that shows a clear indication of recession and a slowing of the markets, Joe.
Yeah, and ADP, remember ADP said construction jobs fell, which is another one of those indicators, right, that says, wait a minute, hey, the building has stopped here, and in a lot of places in the country now. We'll see. It still had 200,000 jobs. Now, granted, it's going to get revised, and they always seem to revise it significantly lower. But we've definitely, Jason, I think for this part of it is we've shifted down again. And now all of a sudden, now we're starting to see, restaurants, Red Lobster, Olive Garden, so many others. And you talk about a lot of the fast food franchises filing bankruptcies, big ones too, like the largest Burger King franchise filed for bankruptcy, the largest Wendy's filed for bankruptcy. They can't even create a $5 meal for more than a limited time because, well, let's face it, it costs more than $5, right? So it's now spreading to the retail establishments. We didn't talk about Rite Aid. Rite Aid may be out of business before the end of the year. They announced a lot of store closures as well. We haven't heard from CVS yet, but Jason, it does appear that this last little slowdown started to push some of these companies over the edge, and it almost feeds upon itself. That's kind of the problem, right? Well, gosh, now they're starting to close, right? Now we're starting to see, look at the layoffs, right? Layoffs went from about 210,000 a week, 240,000 a week, and now it's looking like, especially with the news from Challenger Gray and Christmas, big layoffs are starting to follow suit as well. I guess good thing we got war going on, because otherwise we really may be in trouble.
Well, and that's that's always where they go when you change the economic system. Is this one of the places you go is wars? So it's funny how you went right there, because that's kind of it, isn't it? I mean, the pandemic, I think, it's very possible they tried to get this thing done during 2020, Joe. That we saw in 2019 all the indications were there, and I don't know if COVID. I don't know if the way that COVID was handled, I think, was supposed to be, I think, moving us towards where we're headed. And for I don't know whatever reason, if the controlling of COVID didn't work, because it's kind of a war against a disease, kind of like a war against drugs or a war against terrorists. I wonder if that just didn't go as well as they wanted it to. I mean, they shut down all of society, right, Joe? They did a lot of things. They printed all this money. Was that to bring us to where we're headed, or did that fail? Biden became president, things kind of went sideways, and now here comes 2024, the new election. In my mind, most likely we're going to have a Republican in there, because this thing's falling apart. And as you said, when the retailers are shutting down and things are failing, and what sectors are going to keep the GDP up? Well, there comes war, right, Joe? Spend some money here, spend some money there, blow things up. And by the way, don't look at who actually caused the economic mess. It's the war's fault. It's this country's fault. It's somebody else's fault. It's not the Fed. It's not the financiers who are going to benefit. Yeah, and by the way, the guys that caused this are going to benefit from whatever happens. They're going to profit the entire time, Joe.
That's so true. It's so despicable. It really, really is. How about this, though? Are we in for a major shock here? J.P. Morgan is now warning its 86 million customers. Wow. Why would you ever allow a financial institution to be this big? 86 million customers. That free checking accounts may soon be coming to an end. They're saying that it's not their fault. It's the regulation coming from Washington, who are pushing for an $8 cap on credit card late payment fees and a $3 cap for overdraft fees, right? I don't know what they charge for this stuff, right? I don't. But the government now is trying to tell the banks, hey, you're only allowed to charge X amount if a customer's late on a credit card payment or if they bounce checks. And now they're saying because of this law, the Consumer Financial Protection Bureau, which passed the new caps It is being appealed right now, but the bank is saying it looks like they're not going to win, saying that these changes are going to make it that much more difficult for the banks. And I'm just thinking about, wait a minute, you all passed your stress test. I mean, I granted where there wasn't much of a test. And I know J.P. Morgan failed their living will, right? They can't go down. They got 86 million customers. But, Jason, they're saying, yep, get ready. We're just charged for everything. I think that's going to be the new thing when it comes to banking.
That sounds logical, Joe. that sounds logical. So I guess we're going to keep watching. We'll keep watching, see things happen. Can't just have big lots going down for everything to fall apart. I think we're going to see more and more and more of this, Joe. We're going to start to see this decay continue to happen, and it's been happening slowly, Joe. But it seems like the warning signs are getting louder and louder each week, isn't it?
Boy, I worry about some of these smaller banks. If they can't charge these fees, how are they going to stay in business? Patriot News Hour. We'll be back after the break. 800-951-0592, Patriot News Hour. Joe and Jason here on this Monday. And again, it's hard to figure out how much longer it can go. And I think that's the hardest part. When is it? Wouldn't it be great if we knew, if we could, I don't know if you any NASCAR fans out there, they had the street race in Chicago yesterday, and it started raining and this and that, and the race had to be stopped. They don't have lights. So NASCAR said, okay, at this time, race is over. Right, no matter what, where we're at, hey, this is over. So you knew exactly when it was going to over. We don't know that, right? That's something we don't know that. We don't know exactly when. But when we start looking at all of the numbers that are coming out, whether it's the effing pigs, Japan. Here in the United States. How about Chicago, their pension plan? Yeah. COVID was the big fill it up deal, right? Well, $37 billion shortfall for the city of Chicago. You know what? We've had a great stock market, too, really, when you think about it. Net pension liabilities for the city's 4 retirement funds rose by another 5% just from December 31st. So it's growing at a 5% clip like every 6 months now, and saying that the city's going to have, obviously these long-term structure problems. California, right, they just had a whack. $48 billion. And it's a bigger story because, Jason, there's so much debt going on between all the countries out there, so much debt now going on with states, so much debt going on with cities and counties. And it's kind of all coming together, isn't it? It's not just one problem, right? It'd be bad. Okay, France is a problem. That'd be bad, right? Okay, Italy's a problem. Japan's a problem. Those would be bad. But remember what the banks have been saying. We're one shock away from problems in the treasury markets functioning properly. And Jason, what a lot of people don't realize, what a big holder of treasuries are as well? Pension funds, right? That's where most of these groups put their money. And if they've got to start selling, right, because, we don't have enough money to pay everyone's pension, so we've got to start dumping these. Jason, it's another one of these segments of the economy now that we've got to worry about how many treasuries are really going to have to be re-upped every single quarter. And it's starting to become a huge problem already. The Treasury already told us, hey, in August, we've got to increase the sizes again. And Jason, I think this is just going to be a pattern here where every 30, well, probably not 30, probably every 90 days or so, there's going to be another announcement. We've got to increase auction sizes, because some of the groups that have been known to be big buyers are now net sellers?
I think you're talking central banks and or governments, just the central banks, right?
Well, government's got to sell, right? Japan's been selling. China's not buying. But now with these states and these pension funds, Chicago just announced they got a $37 billion shortfall in their pension.
Okay.
They buy treasuries. They're huge treasury buyers, these pension funds. It's another one of these areas where all of a sudden, well, gosh, that hasn't matured yet. That's not supposed to be sold yet, right? But now, guys, they're selling it, right? They're selling it, of course, selling it at a loss. But it just bodes the question: where's all this money going to come from?
So I guess it kind of begs the question: if a pension fund, like Chicago, if they're going to start selling this stuff, what are they going to buy to put in there? Right? If they're selling it, does that mean they don't want to buy new U.S. debt? And if so, then what are they putting in these funds?
I'm sure. Well, that's
the few
the problem,
people that have
right?
pensions.
They just keep having less and less money in the fund boy. Right? I believe me. They wish they could be buying it, right? That's what they'd love to do. The problem is every month they're like, well, gosh, we just we just sent everyone their pension checks. We got less money in our account every month.
Yeah, we talked about this back in 2019. We talked about all these cities having these problems, right? And then suddenly the repo market had their glitch and their problem, and then suddenly COVID blew in. So here you are talking about these things again. It's a little different problem. You're talking about the selling off treasuries, but it's still it's essentially the same problem. The pensions funds of these states, these cities, they're in turmoil again, Joe. It's kind of funny how all those liberal cities, especially like Chicago, were falling apart, and then then COVID blew through and all that printed money, and so suddenly we haven't been talking about that very much. And now in the late 2023, you started talking about it again, Joe, and then this year, starting to talk about these pension funds again having problems. I mean, is that all they bought with all that printed money that they just got 4 years? Is that all they got, Joe? And just makes you wonder how the whole thing works, right? Why 4 more years? Why did that buy us just 4 more years? But here we are, Joe. It's kind of weird to be talking about the same stuff we were talking about, in 2019 today. It's very, very interesting. It seems very very specific amounts and very specific decisions were made for a very specific timing. So all of these things, Joe, just makes me more comfortable being in gold and silver. Just how many times are we going to say it? It's going to be said over and over and over and over again. All these things scream at you, the individual. You can't tell Chicago's pension fund how to run things. You can't tell your local labor union what to do, or you can't tell your governor what to do. You have no control over that. You can vote if you think that's going to make any difference, but what it really boils down to, what are you going to do to take care of yourself financially? And every time I hear this news, Joe, every single time I hear it, I just am comfortable in the fact that gold and silver is a safe place to be. If there's investment out there, there's an opportunity to take advantage. Everybody's got different opportunities available to them. But when it comes to gold and silver, that's where your safe haven is. That's where you sit comfortable and wait for the right opportunities to come. And when things go the wrong direction, gold and silver just goes up and protects your ability to continue to take care of yourself year after year.
And it's funny. You start thinking about all the rule changes that they tried to very quietly send down the pipe where, again, if you don't hold it, you don't own it, period. Just understand that. It's not your money. They want you to feel like it's your money, but it really isn't. Patriot Radio News Hour got a great special for you. Plus, what day is going to be important this week? I'll tell you that when we get back. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Monday. Today's special, and it's a good one. $20 gold pieces. $2,500 $25. I'll tell you what, because I'm just in the good mood. 4th of July holiday. We're off for a few days. If you buy 20 or more, you know what? Scratch that. 10 or more. 10 or more, $24.95. So that puts it like, what? Almost within $100, $110, $120 of spot. You got spot, what, $23.75? Take advantage. $20 gold pieces, 1 through 9, 25, 10 or more, $24.95 at 800-951-0592. Now, is this a good week to buy? Right, because we know the trend, right? Gold gets up near $2,400. Sells off, gets to, $2,300, goes back to $2,400. We've kind of been seesawing. Well, let me tell you, I think there's good reason for optimism. The important day this week is going to be Thursday. We're going to get the CPI number. Of course, it doesn't actually track what they say it tracks, but that's okay. And we're expecting another one of these, let's just call it softer type inflation number that's coming on Thursday. And Jason, I've got a feeling, I don't know, but Thursday we also get jobless claims. If we all of a sudden bounce here to 250, maybe 260, we could see a very strong move in gold this week. If, we got to have a couple things happen. Inflation comes in as expected or even a little better than expected because their numbers are dumb anyway. And jobless claims continues to pick up because according to Challenger Gray and Christmas, that's what they say is going to happen. Jason, we could see, very possible, we could see a record high gold price this week.
Yeah, I was wondering if we were going to get up this morning and gold was going to move up and we'd have record highs today. It pulled back just a little bit, Joey. We had this meteoric rise from essentially Valentine's Day through into April. And then since late April, we've had this 2,300 range in gold. And we've had 29 silver up to 31.5 silver range. And that's fine. That's fine. It's people were shocked. People that have been buying gold were shocked at how fast it moved earlier this year. Now it's just doing this sideways thing. And Joe, you and I both, and especially me, I thought in June we were going to see it happen again. We were just barely in July to see it in the first week of July, right there at the 4th of July, on July 5th, it's just tickling that high total. And if we have the Friday movement where it goes up and then Monday it moves up again, that's where it tends to just run the whole week. Well, this little tiny pullback kind of keeps us just inside that $2,300 gold range. But when it breaks, Joe, when it breaks loose, we could have the same thing we saw earlier this year where it goes up $100 one week. And then if we have that Friday action and then we have the Monday action, it goes up another $100. I think those are going to be the permanent moves we see when gold goes up and stays up because seems like there's 3 or 4 reasons I've been looking in the last couple of months why gold should maybe have a pullback. I've even seen a chart that has a pullback for gold for 2180, and it just is not happening. And even if gold pulled back a little bit, I don't think it stays there very long. I think 2,400 gold is really, really close, Joe. And if it breaks that, is it going to stay there? Remember, all those years, and we can talk about years. In 2020, we had just tickling 2,000 gold, $2,050. 2021, 2,050 gold. 2022, we got to 2,050 gold. And at the end of 2023, we got to 2,000 gold. And then it's like 2,100 and 2,200 gold didn't even exist. You can't say, hey, Joe, you remember when gold was 2,150? Or you remember when gold was 2,250? That was the snap of a finger. It was here and gone. And we've been sitting in this 2,300 gold, Joe. So you're right. We could this week see record high gold. And if we have another Friday like we did on the holiday, there last Friday, if we see gold go up dramatically on Friday, you watch out next Monday, and we can say, hey, by the way, on Monday, on Monday. What was the price, Joe? $25.25. You might want to get on board with this thing.
Yeah, 800-951-0592. That is our toll-free number. $20 gold pieces, 1 through 9, 25, 10 or more. That's it, just 10 or more. $24.95 at 800-951-0592. You know, and there's something else. I mean, I know Joe Biden today, nope, I'm not stepping. If he steps down, I think that could be another big day for gold because it's uncertainty, right? It creates chaos. It makes people uncomfortable. I mean, when we look at the political situation, whether what happened in France, what our political situation here, right? I mean, these things are starting to matter. Right? They're talking about, listen, the debt ceiling's coming. I know, shh, don't say that. You keep that quiet, right? Not only do I feel like whoever's the next president, I just hate to be you because I don't think there's anything. It won't be their fault per se. But then they also have to deal with literally, like I think a few days after the inauguration, right, they got to deal with the debt ceiling. And I think everybody is ready to downgrade U.S. debt again the second there's another potential problem. Again, I think this is why so many banks out there, so many people out there are talking about, hey, listen, $2,400 gold is going to be really inexpensive gold very, very quickly. So take advantage while you can. 800-951-0592. Jason and I, we're going to wrap it up right after this. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Monday. The big special today, $20 gold pieces pre-1933. Why do we like pre-33? It's simple. The government views it different. Period. Nobody likes to talk about that. You know, when you hear people talking about what type of gold you can buy, they love to talk about price, which is very important. Don't get me wrong. We love price too, right? We want to buy as much gold as you can for as cheap as you can. Same thing with silver. That's what we like to do. But understand that rules are different for different things. When it comes to gold, it's really simple. Take all the gold there is. I don't care what it is. It's a coin. It's a bar. It's from this mint or that mint or wherever. There's only two rules that apply. Rule number one is all the gold, with the exception of the pre-1933 gold that didn't get minted down, is considered bullion. Well, what does that mean? When you sell more than $10,000 of gold bars that you bought at Costco or wherever, Chinese pandas, Kruger Ranch, Maple Leafs, it's automatic 1099. I hate 1099s. You guys like 1099s? As far as I'm concerned, the less the IRS knows about me, the better, especially with all the hiring they've been doing. When you have pre-1933 gold, you can buy it, sell it, trade it. You're on your honor. It's up to you. There's nothing from me. Have a nice day. I like have a nice day. And I like buying close to spot. Well, today's your chance. $20 gold pieces, 1 through 9, 25, 10 or more, $2,495. And just notice, I don't know why. Maybe it's because Biden decided he doesn't care, Jason, what the millionaires and the billionaires think. He's not running for them, and he's staying in the race. The Dow just dumped 50 points. It was up about almost 200 earlier today, so we'll see how it plays out. But again, it's just another one of the so many. Think of all the factors. Right? Are we going to have World War III? Is Japan going to implode? Is France going to implode? Is Italy going to implode? Is the UK going to implode? Is the United States Treasury market going to implode? Right? I mean, Jason, so many things.
Well, a worldwide economic reset is upon us. We've been warned about it. It's been told right to you if you're looking at the information. And the last time there was a worldwide economic reset, it was called World War II, Joe. So I don't know if that's what we're headed for or what the emergency that's being planned for us, but they sure made 2024 and something that's as simple as an election, which is really, a presidential election shouldn't be as such a huge deal as they've made it out to be. This is like the end of the world is this election. Well, it's not the end of the world. It's just, it used to not be so much of an emergency of who got elected, right? But now you see it in the fear-mongering news that you're supposed to be afraid and supposed to be watchful of the events that are getting ready to unfold. And you won't be looking at those that are changing the monetary system worldwide. And all the guys that are making the decisions to change it are buying gold. So, I'd rather not play the game that they're playing, but I'm just one guy, right, Joe? So maybe better be one guy yourself and get yourself set up with a little bit of gold and silver, Joe.
There it is, 800-951-0592. Jason and I, we're coming right back with the half-empty cup. What is the World Economic Forum talking about? We'll tell you next.